Well, I can't get that. Darn it. Come on. Well, hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. A little bit of a setup issue, as always on Friday. Was just trying to get everything done here, and hopefully we are live. We're live. Good. Okay, so I'm just trying to get TikTok up. There we go. Okay, there we go. I think we're up with TikTok. Yeah. Okay, we're live with TikTok too, so that's kind of a good thing as well. Let's see if I can get it correct here so that everyone can see it on TikTok. I still haven't solved the problem of broadcasting my screen on TikTok. So basically, this is a picture of the screen that is being broadcast on YouTube. So hopefully that'll work. Anyways, let's get into it. Hey, guess what? Of course, not a great thing, but it looks as if Elon Musk is, they're basically coming after him. I think, because the Twitter bid failed, and now it seems as if the powers that be are trying, I think, to take a little bit of wind out of his sail. I mean, also the market has been pulling back, so it's not the whole thing, but there, I smell some fish here, and that is Tesla has been dropping. Just want to kind of show you the chart on Tesla, and it has definitely been dropping here. But the question is, is he being punished? And I mean, I wouldn't put it. I mean, I used to a few years ago, I would have been very skeptical about this, but I tell you what, I'm not as skeptical anymore about some of these things that are going on. Here's the Tesla chart, and as you can see, it is moving down. I mean, definitely moving down here. Right now we're at 665 after hours. It did a little bit of a bounce. It did get a little bit of a bounce after hours, but basically, Tesla is moving lower now. I do see some support, but it may be as low as 580. You can believe that 580. Of course, I've been out for a while, but it's just precarious in terms of everything. So I just really have to bring that up. Basically, we've moved into a marketing correction, and we were in a sort of a very, very weak uptrend, but now as of Friday, we are in a correction. And what you want to do in a correction basically is you want to move to cash if you can, and then I've been moving short, so kind of give you an idea of what's going on here. I'm only holding two stocks right now. They're both up today, interestingly enough. That's Flex LNG and Chevron. That's the two that I'm holding long. Not a lot long there, but definitely an interesting thing going on here. So this is all I'm holding long. Rest is cash, but I am in the short. I am short a lot of stocks. I've just it's funny because I haven't put in all of the trade dates, but basically this is what's going on. I'm short on a bear put spread at Boeing. We're up about $550. That was opened on the April 27th. Boeing got hammered today. Let's put up BA here. They're just having all kinds of problems, and it's just been a weak stock all the way around. But it's a good candidate to be short because, as you can see, it's just kind of moving right down there. This is where we shorted here, and then we've continued to move down. Now, what I do is I use very conservative bear put spreads, and I typically don't like to risk any more than about $500 on each position. So these represent about $500. We're also short on Salesforce. That's also another Dow component, believe it or not. And that one is weak as well. That hasn't been declining quite as fast as would have liked it. We entered the short here, and then we're down from there, basically picking up about 113 bucks so far. We're going to be holding this one a little bit longer, and hopefully we'll make some money on this one. We're also short on Disney. This is another Dow stock. Excuse me. Golly. We're also short Disney, and as you can see, that one is down as well. That's, we shorted it right about here. Let's pull it up on the screen. We shorted it here, and then we've started to move down. We've got a very, very weak relative strength on Disney, about 19. I do expect this thing to move lower as well. Let's see, what else do we have here? Now, we did short yesterday, and I hope you saw that video, Ross Stores. We're up an incredible 610 bucks in a day on that. That was a good one. They just fell off a cliff. ROST, of course, is the symbol for Ross Stores. People just aren't spending on retail, and I think the whole retail sector is extremely weak. I haven't even annotated this one, but this one just took a swan dive. We shorted it. We were basically here, and then we shorted it, and then boom, it went all the way down. It's recovered a little bit. It's 72.20. 24, but when we shorted it, it was at 92, believe it or not. So it just took a dump, which is good for us, but not good for the shareholders, unfortunately, on that one. We put on three new shorts today. Costco. Now this is up a little bit after hours, so we didn't quite get the this one. I do believe is gonna move lower. And we will see about Costco, but I do think this one is going to move lower. It's going to be reporting next week, and I think that may be a catalyst. I have a feeling that the numbers on Costco are going to be very bad, just because people just don't have the money to shop right now. They're spending all their money at the gas pump, and so that's kind of where it's going. And I do think that we're going to see on Costco, I also think we're going to see this pullback. Possibly, I'm looking to see it pull back possibly to right about 405 or 400. That's my guess where it's going to settle next week. And of course, if that does, then we'll do pretty well because we have a 410, 405 bear put spread. So that should do fairly well as well. Hopefully we'll report it when next week. And also Best Buy, I think Best Buy is going to fall out of the sky. That's going to be next week. BBY, of course, is the symbol on that one. And I did make a video on that, and I put it out there on YouTube. So hopefully you can take a look at that one. I'm going to follow up a little bit more. It took me a little bit more time to make the video than I thought it was going to make. That's already up 35 bucks. So I think that one's looking pretty good. Hopefully we will make some money on that. So thanks for bearing with me in my terrible technical stuff. Here we go with the questions. Thank you for asking all your questions. What is your outlook for the market? Where do you see it the end of the fall? Any patterns that we should look? Very good question. Here's the thing. Let's just jump on over to the charts here. What I'm going to do is I'm going to put up the spider, and I think what we're going to see is a lot more damage, obviously. And I don't think this is the. And I'm going to go over here to the monthly, kind of take a big look at it. What's happening here is that we are losing support at this line. If we pull below this line, we're looking here at the monthly chart. If we cross below the 200-day Actually, this is not the 200-day. This is the, I have to get it correct here. This is the 30-month chart. This is the 30-month line. And this basically tells if money is coming in or out. As you can see, we've been really in a pullback since the beginning of, really since November last year. That's sort of when it's been hit. Now, what I do think is that with this news today, we're going to pull below that 30-day, that 30-week line, and I think we could go down another 10% there. So I'm kind of looking at a number right about 340 or possibly lower. I think we're not done yet. I think we're going to pull lower than, much lower than before. This was the COVID. This was the COVID pullback. Now, what I was doing during the COVID thing was I was shorting. I was basically shorting the shorting the the QQQ. I was buying shares of. I was selling shares of the Q, and then I was buying them back each week. So I do think we're going to see it a lot lower than this. Currently, the S&P 500 spider is at 389. I think we're going to see it go possibly down to 340 and possibly 320. So I think there's going to be a lot more pain here. That's part of the reason I've moved my strategy to, that's really why I've moved my strategy to a short strategy. And basically, the only thing I'm long and is oil and fertilizer and LNG shipping right now. So those are the only. That's really, and I'm not even long fertilizer anymore. I'm basically only long oil and LNG. That's about it. So, boy, I tell you what, it's going to get worse. Hey, thank you, Burlington. Yeah, Burlington was a very good short. BURL. I didn't have time to put one together on this one, but let's see. Let's pull it back to the daily chart. Yeah. Okay, there we go. Okay, this one potentially. Let's go to the weekly chart to see, kind of look at this one here. We've got on the 26th, which is next week, on the 26th. This is going to report. My guess is it's going to be a bad report, even though they have been making some very good increases in terms of sales. What I think is happening with the retail sector is people just don't have the money to shop. And that's why, even though, Burlington Core Factory is an off-price retailer, but look at the red coming in here. I really fully expect this one to drop. Maybe not quite as hard as Ross Stores, because Ross Stores isn't quite as a big a company as Burlington, but still very, very significantly, very significantly here. All right, let's take a question from 340 for sure. 280 worst case scenario. This is on the spider. I agree with you. I think probably I'm looking at about 320. I'm pretty conservative, but I think we might see 280 on the spider. On Burlington is going to move lower. Where I'm seeing the kind of the support, if you can call it that, is right here at this right about here. So I'm seeing support on Burlington basically at about 110, if you can believe it. So this is potentially a 40-point drop that I'm looking at right now. Nobody can obviously, and that's going to happen in 6 days, I believe, because no matter, even if they beat or they make their number, their store over store sales are going to be off. So I think they're probably going down 40. That would be my guess, and I probably will be putting together a spread, next week on it. Tesla was very overvalued. I agree with you very much, Wayne. I think you're absolutely right on this. But here's the thing. I mean, I made a lot of money on Tesla in 2021 and 2000. I made a lot of money on it. 2020 and 2021. I mean, paid for a house for me. But I definitely agree with you. It is going to move lower, and you shouldn't be in it right now. You just shouldn't be in it. Now, would I short it at this level? If it moves below 600, that's where I think I'm going to probably be looking to possibly short. Tesla. But right now, the thing about Tesla, you've got to be careful because you can get these snapbacks with Tesla that are just intense. So when there's these unwinds, so you got to be careful with them. What I'm doing is I'm kind of taking a more, I think conservative approach on my shorting, and I'm going to where the pain really is, and I believe that's in the retail sector. So, I'm looking to short pretty much anything that I can get my hands on with the earnings in the retail sector, because I think that's where we're going to have a lot of weakness, at least for the next week or two. Then I think the stocks will adjust downward, and then we won't have that opportunity. But yeah, it's going to be bad. More likely a little of both. Yeah. Hey Dan, thank you very much. Is it a good idea to short Tesla? I don't think it is, and I know this. I know this is kind of controversial. People would say, "Oh, it's wounded. That's when you want to short them." But I don't. I tell you why I'm not. I'm not interested in shorting Tesla right now. I think we're until we get below. And let's pull over to the chart here. Yeah, there we go. Let's pull over the chart. Until we get below this $600 level on the shares here. Because as you can see, if let me take the notation, my notations off, because they're kind of confusing. I'm on the weekly chart, by the way, here, just so everyone can see it. But here's the thing I'm seeing with Tesla, and we're on the weekly chart here. Currently, we're at 664, but the support seems to be right about here, and that's right, basically about 580 to 600 right there. So that's where I see potentially support. If we fall below 600, which I think is very likely, actually, then we're going to go down. Then we're going to go down to the beginning of the consolidation. Oops. Then we're possibly going to go down to here. Oops, 340. So what I'm saying is that I'm not comfortable right now shorting it. At this level, I want to see it pull below 600 and pull. This is a floor here. If it falls through this floor, then I think we're going all the way down to 340, and that would be where I would short it. But right now, it potentially we could get a dead cat bounce. It could rally, so I would not be short here just because it's just not. I don't think it's ready. I just don't think it's ready right now, and I think there's other things that are a little bit better. Are a little bit better right now in terms of the short. They will sell lots during recession. I agree. Oh, this is a question from TikTok. Unfortunately I'm trying to get it so that I can show the questions from TikTok. But right now, yeah, I think Tesla is very weak. By the way, Kathy Woods sold, I think, most of her Tesla position, which is incredible. The biggest holding, I believe, I was looking at this last night. The biggest holding right now in ARK funds, which are just bleeding right now. Kathy Woods will be a footnote in history probably by next year. She will be persona non grata. Unfortunately, it's a cruel world, but she's likely to be persona non grata in the funds. But this is ARK funds, and right now, and this is incredible. I found out last night. The number one holding of ARK funds, and it is an ARK, kind of like goes up and then down. Number one holding in ARK funds is Roku. I like Roku. I have a Roku. I love my Roku, but you know what? I don't think it's a good stock because there's streaming services everywhere. There's, everybody has streaming now. They're just the first one. Kind of like Teladoc. They got there first, but, there's no moat. It's going to be very hard to defend their position. So, just terrible. They got out of most of their Tesla. I also think that there's some big money. I think there's some dark money that's trying to punish Elon Musk for exposing Twitter and their bots. I mean, everyone knew it, but I think that's what's happening too. Is that there's just a lot of pressure to sell Tesla right now. But I wouldn't short it. I just wouldn't short it. I wouldn't short that. Supply shortages will affect all commodities like lithium and copper. Absolutely. You're so right about this, Mark. Here's the thing, and this is what nobody is telling you. It's true. Lithium is a big deal. There's a lot of lithium mines that are coming online. SCM is one you want to look at because they're a Chilean company. But you know what? The real metal to have probably is copper because of it's just needed. So I don't know, but with the slowdown in the economy in general, I think I think this still the number one commodity right now in the world is oil. I mean, like it or not. I mean, literally I heard this in Washington State. They're reprogramming the pumps in Washington State so that they can go over $10 a gallon. And I think we're going to see that. And I don't think that electric cars are going to come to the rescue because, quite frankly, the grid doesn't have the capacity. They're already having problems in Southern California to charge that many Teslas, unfortunately. So it's going to be lots of inflation and not very much fun. But we can make money in this down market. Remember, as the stock market goes down, we can short and we can make money. I've been doing fairly well today. I had a very good day today. Not, I am tooting my horn a little bit, but we can make money in this market because 95% of people will not short things, and they won't. So we have a lot less competition, believe it or not. Yeah, we have the competition from the big investors, but we don't have as much competition from the small investors. We can make money during this market. As the market retreats, we can be putting in shorts. We can be buying puts. We can be doing put spreads. I particularly like put spreads because they get to the double whammy. Not only do you get the decrease, but you also get the theta decay, which I can go into for hours, but you get the theta decay, which gives you an extra bump on the potential profit. But it protects you if there's a snapback, like with a dead cat bounce or something like that on the stock where there's a short cover. So, but we can definitely do well in this period. So, just go to get into cash. There's going to be opportunities, I believe. Don't short post, yeah, but puts and limit your risk. Absolutely, you're absolutely right about this, Mark. The problem with Tesla is it's so big. There's so many big players in it. You can get your hat handed to you when the short covers. So be careful about short covers on Tesla. Is it good to hold a put spread until expiry, or better to close at an early profit? You know what? Here's the thing. I think you're talking about the. Thank you very much, by the way, for the put spread that we did on Ross Stores. Let's look at that chart. ROST. I'm of the mind that if it's significantly below the break even point, I think it's better to hold it. And I know that sounds kind of odd, but I believe it's better to hold it. Now, the break even point on the spread that we put out yesterday is 80. It's right here. So what I think is that as long as you're below 80, you want to hold that thing to expiry. So what I would do, and what I do, is I put in an alert, and that is at 80, and that's my alert, basically to consider to close the the trade. So I'm going to put close spread. And basically what I'm doing here is that because we're significantly below this $80 mark at 72, I want to hold it. I want to hold it because the every day that it goes, every day that it goes is more money in my pocket. Why? Because of the theta decay. So I like to hold them. But of course, if it moves above 80, you want to close that thing. You want to close it if it moves above 80. But if it's below 80, I would hold it, and that's what I'm going to do. That's what I'm going to do here. All right, close already. Yeah, okay. All right, huge bag today. A couple of green. Yeah, you could definitely give it all back. Okay. You're right. Maybe I'm a little bit more greedy here. I probably am. There is a saying, and it's really a rule of thumb. I mean, if you're up more than 50%, it's a good idea to close. So, but I think I'm going to try to get a little bit of more runway out of Ross Stores, anyways. We'll see. We'll see. I may close it. I may just put in a limit order to close it. So, yeah, you're right. Is TGT dead? Worst drop since 2004. I don't think they're dead. I just think retail is just hurting. I mean, we've got supply chain issues. We've got all kinds of issues with the retailers. They just it's not that they're doing anything wrong. I don't think they're doing anything wrong. It's just that, look at this. I mean, this is Target. This isn't like a fly by night company. This is Target. Look at how much they came all the way down. They dropped literally out of the sky. They dropped from like about 210 all the way down here to 155. That's tremendous. Now, I don't think it's going to rally up. I don't think it's going to. I think this is the new normal. I think that at least right now, retail is hurt. So, I think it'll come back because I don't think Target's going to go out of business. But I think the stock is going to fall a lot because if we look at it, I mean, the support for Target is really at about 125, and we're at 155. So we got a ways to go. I don't know. I think it's even shortable from here. I wouldn't necessarily run out and short it, but I won't short it. All right. What are the 3 top sectors in the IBD? That's a good question, by the way. That's kind of where you want. That's sort of your treasure map. Let's click on over to that and see if I can give you that information as best I can. All right. So this is kind of hard to read, unfortunately. I do have the heat map, by the way. If you go to the www Dallas Trading Floor, I do have a link to the heat map up there, so you can get that on that to kind of get a fuller look on it. But currently, right now, on the let's go to the groups. Oops. Let's go to there's 197 groups as IBD divides the market up into 197 groups, and the rank currently is, and let's put it up here. The number 1 group right now, it's been there for a long time. It's coal, energy coal. Can you believe it? Oil and gas, number 2, Oil and Gas Royalty Trust, Oil and Gas International E&P, Oil and Gas Canadian, Oil and Gas Integrated. Kind of get the picture. That's all oil and gas. I mean, there is chemicals in here. This is where, this is where nutrient is, and the agricultural chemicals is fertilizers, but everything else natural. This is oil and gas, refining and manufacturing, oil and gas. So literally 1, 2, 3, the top 9 spots, with the exception of agricultural chemicals, they're all oil and gas. And then even if you go below that, you've got oil and gas. So right now, this is the place to be. The top sectors right now in the market are oil and gas. Oil and gas. Now, what we can look at the spiders. I didn't have the chart ready for you on that one, but maybe I can get that. Maybe I can get that up. But let's look at the spiders to see kind of where. So let's see if I can get the. Let's see if they've got it. Okay, the XLE is probably the number 1, it's been the number 1 for a while. Of course, that's the energy one. So let me see if I can pull this up for you. No, this is junk. Okay, I want to see the top. I just want to see the top sectors for today, and I can almost guarantee that the top sectors are basically energy and utilities. There we go. Okay, here's the sector ETFs. This is a little thing from hopefully we can get this. It'll give you the chart. Okay, yeah, there we go. Okay, let's see. No, this is a terrible chart. But basically, it's, I wish I could get you a better chart here, but basically it's energy. Basically, that's what it is. Coal, oil and gas, drilling, oil and gas. Yeah, absolutely. Yeah, you're absolutely right, Alexander. That is correct. That's where the strength of the market is. That's absolutely where the strength of the market is. Okay. Cost put spreads were for June 17th. Yes. Let me pull up my spread calculator here. Kind of got this thing. I think it's kind of cool. This is a app that I've been kind of using. It's not totally as much as I would like it, but it's kind of cool. On the Costco, I used the July 1st. I'd use the July 1st puts here. That's what I did on this one. So basically, that's I just did 2 contracts, not a lot. Again, for me, this is all about risk mitigation. I'm trying not to go too crazy here. I'm just trying to be very just very cautious and and put them in there. When we opened it today, basically we're negative about $45 on this, but I totally expect as Costco reports next week it to move lower, and I really do. So let me see if I can show you the chart. Let me do that. Okay, so I fully expect right now we're basically right here. We're right here, but I do expect it to move lower. This is kind of weird, but as the as the price, and this is like if Costco goes to 388, you can see it just kind of gets better, and I think that we're going to see it move in this direction. But the puts that I was talking about are the July 1st 405 and then the July 1st 400. So basically buying the 405, selling the 400. That's kind of what I'm doing here. And I hopefully will have enough time for this to work. Hopefully we'll have enough time for it to work. And I think it will. I think it will work pretty well. All right, let's take a look at some of the questions from TikTok. Thank you very much. Why aren't you streaming on YouTube? Because I was 5 minutes late and I couldn't get the thing to work. That's the reason. I wish I hadn't run out of time. YouTube, if you don't start within 10 minutes of your point in time, it knocks you out. And I was knocked out right, like literally as I was pushing the button, unfortunately. So I appreciate you bringing that to my attention. First TikTok stream on stocks where someone actually shows what they're talking about. I'm trying hard to do this. It's very hard on TikTok because hopefully I'm going to have eventually the ability to show everything. But let's kind of just go through the trades that I have up that are short. We did this briefly before. Short Boeing, short Salesforce, short Disney, short Netflix. Ross Stores, of course, we just came through earnings. That was a great one because we definitely moved lower on that one. Ollie's Bargain Outlet, that's the one. Just put that one in today. It's up 32, but I suspect it's going to go south. And I think Best Buy is going to get hammered next week. That's my opinion, anyways. I think it's bad. I shouldn't be excited about that. But I think that Ollie's Bargain Warehouse and Best Buy are going to get slammed next week. I don't think Costco is going to get that slammed, but I think they're going to move lower. I really do. BBY details, please, on the put spread. Absolutely. Let me show you the BBY. That's Best Buy. And I did put out a video on this one. Sometimes I'm just trying to figure out how to do it. Currently, on this one, we just did this one today. It's saying, and I don't know if I totally believe this, but I don't want to sign up for CNBC. Sorry about that. It's just the dancing baloney with those guys. Okay, let's see if I can get this up for you. And let's go over to the bear put spread on Best Buy. It's Ollie's, Costco, Best Buy. There we go. All right, this is Best Buy. Let's pull it up on the screen. Come on, baby. Yeah. All right, this is Best Buy, and what I did today was that I bought 2 contracts of the July 15th, 2020, 70. And I sold 2 contracts of the July 15th, 65. So basically what I'm saying here, in not so many words, is that I want the, is I'm looking for Best Buy to move below 70. So let's pull up the Best Buy chart. See if I can get that up. Let's go to Best Buy. I like Best Buy store. I bought some stuff there, but I don't think they're going to do that well. Trying to get it to, it's a little bit slow here. I'm having some issues. I'm going to exit the pages. Okay. Oh boy, just did not like that. So maybe I can get back in. Right. And we had a sort of a mini crash. Let's see if I can get it back up. Right. Sorry about the this, but we'll get it up here in just a sec. There we go. For some reason, as you can see by the lag on my voice and the video, we're having a little bit of issues when it comes to the bandwidth. For some reason, on Friday afternoon, I've noticed this before, we have these issues where it'll sometimes lag. So there we go. No, that's TGT. Okay. Well, I'll get Best Buy up there. All right. So here we go. Here's Best Buy. And as you can see, Best Buy is in this sort of this downward trend. Ouch. Look at that. Now, here's how I like to look for shorts. And of course, it's a lot easier in this market because the whole market is in decline. But you notice how you had this climax top up here, and this is sort of this is what they call the head. This is the head pattern. This is what they call the head here. All right, and you notice that we have a shoulder here, and that's a right shoulder. Now, if we go over to the monthly chart, go over to the weekly chart, excuse me, because that's really how we should be looking at it. You'll notice that there's a left shoulder here, and it's low, and then there's a little peak. This is the top. This is the blow off top. Then there is the right shoulder. Notice how that's lower. And now, if we go back to the daily chart, you can see why this is a good short, because it's come down here and it's been holding that 21-day line. Well, a few days ago, 3 days ago, it fell below the 21-day line, and then it fell below the 10-day line. And so now I suspect there may be a little bit of a rally, but more than likely we're going to see this thing drop. And the reason we're going to see this thing drop, first of all, is because other ones that are like companies have dropped as well. So I think that we're going to see a drop on this. Now, currently, this is 80, and if we can kind of look at I'm going to switch to a little bit finer chart here. I'm going to go for not a 10-minute chart, but a 60-minute chart, and this will show several days. But basically, what's happened here, you see, this was the break, and then this was the break to 80. 80 was the support. It went down below the support, and now it's rallying back up to 73. I very much think that we are in sort of this death spiral. Now, there was some buying today, and this is essentially short cover right here. But I believe that we will be below 70 come right now we're at 72. I think we're going to be below 70 by the time we come to earnings. And I think earnings are going to push it down even more. And I think we'll be below 65. And if we're below 65 on this short, then as you can see, and this is the Best Buy here, you'll see as it comes below about 67, you see that's where it really starts to make the money. You can see that. See how that goes. So right now we're here. We're at 72. We're kind of right at the inflection point. And as the stock goes down, you can see how that just moves up very, very quickly, and we start to make a lot of money there. Hopefully this is right. This is, anytime you're trying to predict something, it's difficult. But right now, just today, it dropped significantly, and we're currently, basically one day into the spread, we're up about 209. So this one has the potential, I believe. I can't remember exactly what the potential in this one is, but it's it's like $1,000. It's about a 2-for-1 on this, 2.5 to 1. So it should hopefully pan out pretty well. So what I try to do is that I don't go too crazy on these, because I could go in a lot heavier than I do. I just don't like to do it. Why? Because when you're wrong, you're really wrong. So I like to limit my risk on these to about $500 or less. It's just a personal preference. I could obviously do a lot more, but and then if it comes, and I like it to get a 2 to 3 bump on it. So and I try to short in the same sector, because that way I know if there's bad reports. Like it started with Walmart. Walmart went down. If Walmart is down in retail, everything pretty much is going to be down in retail. It's just the way it is. So that's my kind of strategy. Anyways, long story short. All right. VGenics. Interesting. Planet Fitness. Okay, let's look at Planet. What is Planet Fitness? I don't know what their symbol is. Planet Fitness. Let me just see what their symbol is. I don't know this one offhand. I kind of agree with you about Planet Fitness. I drive by on the way to work up to my office here. I drive by it was a big huge gym. It was the LA Fitness, and they're out of there, man. They're out of there. It's unbelievable. Everybody's into them, and then all of a sudden no more. So I think you might be onto something here. I'm going to put Planet Fitness symbol. The only thing about Planet Fitness, though, is it's Planet Fitness, PLANT. There we go. Thank you. All right. So now let me pull up Planet Fitness here. Let me just take a look at this one. PLANT. No. PLNT. No. PLNT. Mm-hmm. Planet Fitness. There you go. PLNT. And this is the Class A. So let's look at the stock. Ooh, this is bad. It might be a good short, though. I agree with you. Let's see if there's anything coming up on this one. This is look at the daily chart on Planet Fitness here. Let's see if this one is. Oh yeah. This has definitely got the look. Nice little death cross there going on. We had to rally to the 21-day. It couldn't hold. That's good. Relative strength 33. Lots of selling action going on there. $70 a share, way overvalued. Let's look at the weekly. This is going to be a good one. I don't know when when is their, yeah, they just, okay, 8-6. So they've got a ways to go. I'm a little bit worried, because look at this. Their sales are going up, actually. They had a pretty good quarter. Their profits are going up. I don't know. I wouldn't short it. And I'll tell you why I wouldn't short it. It's because this is a franchise, and even though the PE ratio is like nosebleed territory at 65, we've got increasing sales, something I'm not really excited about. I want to see decreasing sales. And also we've got increasing profits. So I would be really careful on shorting. I'd be really careful on shorting Planet Fitness. Just because I don't like the way that's trending. Let's look at BBY. It's sort of part of the reason I was interested in this one. Now, hopefully, I'll be right on this. But BBY or Best Buy, is here's another reason first of all, the chart was looking pretty awful with Best Buy, but also you'll notice on the change on the sales, it's declining sales. It went from positive sales increasing by 20% to 0 to 3% down to 1% profit to 22% loss. So this one's going probably lower. That's why I shorted this one. Not really, not really looking, not really looking as great. Let's look at Ollie's, OLLI. That's what Ollie. This is Ollie's bargain. I think it's Ollie's bargain outlet. That's what it's called. Yeah. This is why this is why I went against Ollie's. First of all, it has a terrible chart. But second of all, if you look at the fundamentals here, you've got a situation on Ollie's where it was doing great a year ago. See, and it was doing great a year ago, up 30%. Then the pain started. Sales went down 21%. Then the sales went down another 7%. Quarter before last, and then they went down 3% this quarter. I have a feeling the sales are going to be even worse. They're going to be even worse than this next report. So that's one of the reasons I want to short these kind of stocks that I'm seeing that trend, that fundamental trend of really getting hammered. So I want the right setup, I want the right charge pattern, but I also want the right fundamentals, because that can be really good. Can I buy Google and Snowflake? No. No. I like Google. Google is probably one of the most profitable companies in the world. But right now, I just don't like to fight that trend. I just don't want to fight the tape. Because Google, the tape right now is unfortunately is downward. I mean, it's it's GOOGL. There we go. Google, of course, it's bring it up. Of course, it's the real name of the company, of course, is Alphabet. Everybody knows that, and it is going to be splitting 20 for 1. But it definitely does not have a good look. I mean, we're definitely below the we're definitely below the 50-day moving average. We're below the 200-day moving average. But so I wouldn't be buyer here, because I think that there's a very good chance, even with the split, even with the 20 for 1 split, there's a very, very good chance that we're going to see it bounce and move higher. See, it's kind of moving higher, but it may not move higher. So really, the jury's out on Google. I wouldn't buy it. Because the trend is lower. The short-term trend is higher, though. So tough one to buy. Wouldn't be a buyer here. And with Snowflake, same thing. There's a lot of institutions that are in Snowflake, but remember, some of these funds are like like ARK Invest. You think, oh, they're so smart, but they can lose money too. And the let's look at the chart for Snowflake. It's not good. So why not go with the strength? Why not go to the oils? See, this is the chart for Snowflake. I just don't think this is a good buy. Look at it; it's just going down. I mean, yes, their sales are going up, so that's really great. Congratulations. They're not making any profits. See, no profits there. So in this market with high interest rates, everybody is looking for profits really fast. So that's why the big international oil companies like Chevron are doing really well, because everybody knows they're gonna crush it when gasoline goes to $10 a gallon. They're gonna crush it. Whereas Google and Snowflake, they're gonna be great, maybe this year, but they're not gonna be. It's not gonna be like Chevron this year. Chevron's gonna just crush it this year. So I wouldn't be going long. That's the long and the short of it. You want to be short most of the market, long only. Jim Elon didn't do it. I know he didn't. It's such a scam. You know what it is? I mean, thanks for that, by the way. I think what's going on here is that some of the big powers that be, that he messed with Tesla, and now they're messing with him. So it's like a political campaign. I mean, anytime somebody gets close to the honeypot, there's sexual conduct. So they found somebody in his past that I don't know. It's just it's very sordid. It's very sordid. I mean, I do think though that Tesla's going to come down a little bit. They're suffering because of the shutdown of the China plant. I don't think that the profits are going to be spectacular, but I don't think Tesla's not going away as a company. But it's not going to be on the rocket sled that it was, last year. But that's okay. We can make, we can make money in a down market too. So So I'm not in Tesla now. I admire the company. But yeah, I think they're trying to get him. I think they're trying to get him. Good question, James, on Lulu. I looked at this one. I've looked at this one for a short several times. I actually got kind of burned about this one. I was thinking, how in the heck can these guys have share prices so high on yoga pants? But people really like their yoga pants. So, and they look good on some people, not on me, but on nice, younger woman that is doing yoga, they look great. But you know, yeah, I mean, this is a potential. Here's the thing I want to see with Lulu. I want to see a rally back up to about 340. Now they're all the way down at 270, and you see they're starting. They're starting to kind of. It's starting to happen with them. Yeah. So we're starting to get a little bit of unwind. So it's coming down and then it's bouncing. It's a little bit buying. This is short covering here. This is what this is. So yeah, I mean, Lulu might be ready soon. Let's see. I'm not sure when their earnings are. I like to short around times of earnings because that's times you get the biggest drops. The 7:30. So I'm going to put this on my list. I may be shorting this around a little bit into July. I'm going to probably wait on this one, just because earnings are coming up, and earnings probably will be good for. I mean, they're pretty decent. So I'm going to be waiting a little bit on this one, just because you get your best bet when you do it that way. All right, let's take questions from TikTok. Thank you for everybody. Why aren't you streaming on YouTube? Because I unfortunately missed it. Tesla, please. Is it at a buy point? Absolutely not. Everybody out there, please don't buy Tesla right now. Don't buy Tesla. Don't buy Tesla, because it's not it's not time. This is not a market to buy it in. So don't buy Tesla. Don't buy Tesla right now. It's just not at a good point to buy it. It needs to go down. It needs to base, and it's not based. So don't buy Tesla, please. Don't buy Tesla now. You'll be sorry, I think, if you do. Okay, let's see. Rocket puts. RKT. Rocket Mortgage, they're going to suffer with the rising interest rates. There's no question. Rocket Mortgage is going to suffer, but I don't think there's that much meat left on the bone. Here's the thing. Here's the thing about shorting. I want a stock that's above $10 to short. Now look at there. They've been in decline. So I wouldn't short this one. Yeah, and you can't short it anyways, because there's no options. There's no options. Well, you can short it. Let me explain. You can short it. You can't short it the way I like to short it, with puts. I like to short it with puts. So we can't buy puts on Rocket Mortgage because it doesn't have any. So that's a good reason you can't buy them. So I wouldn't be doing anything there. All right, we're almost at the end. I've been yammering here for almost an hour. Wow. Okay, let's take this question here. Alta, maybe the girls need bread than most. I don't know though. Here's the thing, James. Here's the thing about Alta Beauty. I don't understand it either, but people love this. I mean, it's just amazing. I mean, when times are tough, there's one thing that women will spend more money on. This has just been proven. They'll spend money on makeup. It's really interesting. And but I wouldn't own it, but I wouldn't short it either. It's one of those things. I think it might be good, but I wouldn't short it. But I mean, it has a very good chart. I mean, considering looking at everything else, look. I mean, it's been holding. It's been holding that 50-day line, and it is trading below the 50-day line, but it just started. So this is a strong stock. I wouldn't be it's not time for it yet. When this thing rallies and comes down and rallies, then we'll be ready to short this bad boy. But right now this is sort of in the waiting stage, at least for me. It's in the retail specialty. I like the fact that it's in the retail specialty. This is a very weak sector, and right now, anyways. But the earnings are coming up. Earnings are due. Look at that, 26th. So that's next week. Wow, that I don't know. That maybe a short. Who knows? That may be a short. I don't know. But you're right. Girls will finally over it, especially with TikTok. Absolutely, you're right. When did you realize canceling method is good to buy? When did you realize canceling method is good? Then buy the dip or oh, because here's why canceling works, everybody. And I don't want to be kind of preachy on this, but buy the dips and dollar cost averaging. That's what CNBC tells you. And why do they do that? Because CNBC works. I hate to say this, but they work for the big funds, the Fidelities of the world, and they make money on this. Okay, Kramer is out there. Remember, Kramer got in front of the audience and jumped up and down. I remember this day too. When Lehman Brothers was going out, this is a week before Lehman Brothers, he was saying, buy the dip, it's strong, and boom, as we all know, that was the 2008 meltdown. So, not that I don't trust them, it's just that their priorities are different. The reason canceling works is because William O'Neill, and you should read the book, How to Make Money in Stocks and Winning System, Good Times or Bad, because William O'Neill backtested everything. He is sort of the guy that wrote the language for how to analyze the stock market. Literally what he did in the 60s was he took every closing price in the Wall Street Journal all the way back to like 1920, sent it to India, had it put it onto punch cards, and then he used the IBM 360 to create charts, and he analyzed every one of those charts, and he looked at what makes the best winners. And that's what cancel is all about. It's looking at patterns that precede winning stocks, because you can figure this out. I mean, this is why you have the base patterns of, cup with handle and all these rules, because these are all been back tested. So it's just too easy. I mean, dollar cost averaging is great when you're buying mutual funds, but if you're buying individual stocks, stay away from dollar cost averaging. Also, buying the dip is a very, very bad strategy. And the reason it's a bad strategy is because the best time to buy a stock is not when it's making a new low. It's when it's making a new high. You always want to buy as the stock is moving up and trending up. So it's about the trend. And if you can buy as the stock is moving higher, that's where you want to buy it. Now, right now, most of the stocks are not making higher highs. They're making they're off their highs, and they're down more than 15% off their highs. Therefore, they're moving lower. Just because a stock is a big stock now doesn't mean that it can't go completely out of business. Look at what happened to Cisco just a few days ago. Cisco has been wounded for 20 years. 20 years. So you want to buy stocks on the way up, and then you want to get out of the way when they're coming crashing down. Because to buy at the absolute bottom, it's almost next to impossible to do. And for that very matter, so these little platitudes that they give you, unfortunately, hurt the retail investor. Buying on the dip typically will hurt you. You want to buy on higher highs. Another thing is, dollar cost averaging. Dollar cost averaging is great if you're buying a mutual fund, not an ETF, not a stock. Because what we want to do is we want to be in cash when the market is moving down. Why? Because we don't want to give up our capital. Remember, it's capital preservation that counts. So with CanSlim, we're looking at trend, and we're looking at breakouts from base patterns. When it breaks out of a base pattern, that's when you buy it. And why do you sell it when it goes up 20% out of a base pattern? The reason is because time has proven that tends to be where it stops. It stops moving up. So you gain the most of the upward movement. Right now, it's really tough to buy in the market. Why? Because the trend of the market is in correction. So the overall market price of stocks is going down. So that's why I'm only buying in the area of the market long in the oil and gas area. Why? Because we looked at it. We had the top 10 positions are all oil and gas. So that's where you want to look for your winners. You always want to be buying in the top producing sectors of the market. Always. And you want to be shorting in the bottom if it's in a downward trend. Now, if it's an upward trend, it's different. But we're in a downward trend. So that's kind of my soapbox. Anyways, when China opens, yeah, I agree with you. I agree. I agree with you. That's great. All right, everyone, don't forget. Hey, please, thank you so much, George. So appreciate it. Smash that like button. I hope everyone's going to have a great weekend this weekend. I know I'm gonna have a great weekend. I'm getting my gardening done, so I'm pretty excited about that. So thanks everybody. Smash that like button. I really really appreciate it. And also smash the like button there, like that too. And if you're not already a member of the Action Trade Alerts, it's super easy to do. Just go over here to www.dallastradingfloor.com and we get on the list, and we're trying to send some good stuff out, possibly some shorting stuff this weekend. I don't know. I have to see how much I can get written up this weekend. But I'm going to start trying to really emphasize some of the shorting techniques that I use. It's not the only way to short, but a way I like to do it, and just put it out there for everyone. But you got to be on the Action Trade Alerts. Easy to get on there at www.dallastradingfloor. Thanks everybody. I'll see you back next week on Monday at 5:00. Hopefully, if I get everything right, if I get everything everything set up right on time. So till then, happy trading.